losing money with trading is a part of the process. You can't jump into trading and expect everything is going to work out and you're never going to lose money. You have to play basketball understanding you're going to miss shots. You have to play soccer understanding you're going to miss shots. Trading is the same concept. You're going to lose money with trading. The people that get better at it, the people that learn how to shoot free throws better, the people that learn how to play basketball, sports, and everything better are the ones that don't get bottled up and bogged down in the missed shots. You are not supposed to overthink and start hating the process once you start losing trades. If other people are capable of doing it, if I'm capable of doing it, if people online that you see, I guarantee you guys see people online and you look at them, you know for a fact they're not any more special than you. No one is more special than you. If anyone else in the world is capable of doing it, you have to believe that you are capable of doing it as well. Okay? It's very, very simple. Zoom out. Understand that losses are a part of the game. Okay? Once you realize that losses are a part of the game, then it becomes a matter of just optimizing to become better, right? So what we have is this website, okay? It's called joinwave.io. I have the link in my bio as well as in the comment section. It's the first app in history that shares all trades completely for free. Once you download the app, right? You could download it on Apple and on Google. Once you download the app, within the app, you can join the Discord server. Inside the Discord server, everything that you literally need to learn how to trade from A through Z, courses, books, everything material is there, as well as a trading journal. The format needed for a trading journal is also there. Trading journals 100% will change your entire trading career. You need to document and you need to take inventory of every single trade that you're taking. And a trading journal is going to do that for you. I've been talking about trading journals for weeks now. All right. Trading journals, you have to document every single trade, the exact reasoning of why you entered and exited, the price that you entered and exited, the ticker, the time, every single detail of what's going on with the market. Try to get as detailed as possible. That's how you're going to become a better trader. If you do that every single day, I guarantee you, you're going to see more positive results. 100%. Everything is there. Download the app. You have no excuses. There are no more excuses for being better in the market. Absolutely zero. All right. So believe in yourself. Download the app. This is completely free. Everything is free. And one step at a time, things are going to continue changing for the better in this industry. Whether you guys like it or not, whether people that don't want this to succeed want it or not, it's going to end up happening. So it's already happening. And what you need to do is ride the wave. Understand that you can become a better trader than everyone that you see online. Every single person that you see online, you have to understand that, okay, if they can do it, I can do it as well. If they're doing it, I can do it better. That's what you should be thinking. From the bottom of my heart, you guys can become better traders than I am. 100%. You have to believe it. Okay? And you do that, and not only are you going to be able to help everyone around you, you're going to help yourself, you're going to help your family. And that's the only way to become better. And then we're able to help everyone in the world. The better we become as traders, the more we persevere, the more we push towards becoming better in any endeavor. That's when we're able to help everyone around us. And then we have extra money. Then we can start, okay, there's an orphanage that needs help. There's this that needs help. Okay, there's this cause that needs help. That's when the fun begins. The initial stages of just getting past the hurdle, that's a part of the process. So just keep pushing and keep the end goal in mind. Keep the end goal in mind, but take it one step at a time. Don't get overwhelmed with, an entire goal, right? So there's a concept. If you're trying to eat an elephant, right? Which is a big goal. If you're trying to eat an elephant, Don't think about eating the entire elephant. Focus on taking one bite at a time. If you have to run 20 miles, right? On mile 10, when you're getting very, very tired, don't think, oh my God, I have 10 more miles left. All you have to do is think, okay, I have to take it one step at a time. That's the only thing you can control, taking it one step at a time. And with trading, it's the same concept. Take it one trade, take it one day at a time. Don't put all of these huge, enormous goals and responsibilities on your shoulders. Oh my God, by this time I have to be this. In 5 more years, I have to do this. Stop thinking like that. Take it one step at a time, and I guarantee you things are going to be better. All right. With that being said, in today's video, we're going to talk about the S&P 500, the NASDAQ, the Russell, the dollar, and the bonds. We're going to take a look at what the next steps are for the market. All right. So without further ado, let's get started with the video. All right. First things first, the dollar. We have to take a look at it. It's very, very important to take a look at the dollar, because if the dollar is showing strength, then the overall market is going to be weak. All right. So right now, what we see on the dollar is it's breaking above its major levels of resistance. Big green candle here. And it's showing bullishness above these levels of resistance. As the dollar continues to show bullishness, then the overall market should continue to show some weakness. All right. So this is clearly bullish on the dollar and bad for the overall markets. All right. So there's that for the dollar. Let's go ahead and take a look at the bonds. Bonds look garbage. All right. So the bonds, when the bonds have a more correlated relationship to the market. All right. So if the bonds are showing weakness, then also the overall market is also showing weakness. All right. So clearly the lower Bollinger Band is just in vomit mode. There's a lot more room to the downside on the bonds. The MACD indicator is pointing downwards on the bonds. There's a lot more room to go to the downside on the bonds. All right. So if the bonds continue to show this weakness, obviously it's not a good sign for the overall market. Okay. So the dollar and the bonds both look bearish. Okay. And now, very, very simply, we can just take a look at the major indices and we'll take it from there. All right. So we're going to take a look at the S&P, the NASDAQ, and the Russell, basically all as a whole. Okay. So right now, this is a chart of the S&P, obviously the SPY on the daily chart. And you can see that we opened outside of the lower level of the Bollinger Bands, right? So clearly when that happens, there's a good chance that we get a continued move to the upside. Very simple, right? The IWM, same thing. We opened outside of the lower level of the Bollinger Band here, right? And once again, the Bollinger Band is very, very important because it shows an algorithmic overextension to the downside or the upside. So if we're trading outside of the lower Bollinger Band, then there's a good chance that we should get a bounce back up. And if we're trading outside of the upper Bollinger Band, there's a good chance that we should come back inside. Okay. So the SPY and the IWM, they both opened outside of the lower Bollinger Band, which signaled that we should get a bit of a bounce. Very simple, right? Now the question is this bounce going to continue up? Are we in an environment where it's more safe to go long at support than it is to now just go short at levels of resistance? Because clearly over the past few days specifically, we've seen a ton of weakness out of the market. And specifically the SPY, the NASDAQ, we haven't even taken a look at the NASDAQ. The NASDAQ is clearly showing weakness as well. It's not even trading outside of the Bollinger Band. So there's a lot more room technically to fall on the NASDAQ before it becomes algorithmically overextended. Okay. So we could see that we're trading inside the Bollinger Band here. There's a lot more room to fall before it becomes algorithmically overextended to the downside, which is very, very bearish. Okay. And so basically the reason why that's important is because the dollar is also showing weakness and the bonds, the dollar is showing strength, which is weakness for the overall market. And the bonds are also showing weakness. So all of these things combined, right? Then it just becomes a matter of, okay, here's how you could basically take this. You can take multiple on larger time frames. I'm not talking about day trading. In day trading, you trade alongside the momentum of the overall larger time frames. So if on a daily chart we're clearly bearish, we head into Monday clearly bearishly, right? You're going to trade bearishly on the 1 minute chart. Does that make sense? If we are super bullish in an uptrend, for example, all June, if we're super bullish on an uptrend, then in terms of day trading, you're going to be long because it's an uptrend. You're going to trade alongside the momentum. That's the easiest thing to do. So now, right, we're clearly in a downtrend. The easiest thing to do, the safest sort of trades to do, are just going short at levels of resistance. So now with day trading, that's implied, right? In terms of swinging, in terms of the fact that we just opened outside of the lower bands on the daily chart, on the SPY and on the IWM, what you could have done is basically take multiple stabs with longer term calls at these levels of support, hoping they hold with a stop loss. Multiple trades. You're going to have to take multiple trades. If that's the way that you want to trade, that's what you have to do. Take longs at support. If it breaks below the support, you sell it. The other thing, obviously, that you could do on a larger time frame as well is wait for levels of resistance to be tested and then short swing those. Very simple. Okay? So, especially now, though, right? Now that things are extremely overextended to the downside, it becomes fun to basically try to catch bottoms. And the only way that you're ever going to really become better at this concept is if you take inventory of what works and what doesn't work. Okay, so you need to document your trades and try to understand, okay, I remember, because you're not going to remember. You're not going to remember what happened 4 months ago. Do you understand? Like, it's so important. If we were taking inventory of every little emotion that you felt, of every little instinct that you had, there are certain things that you could look at charts and you can say, oh, okay, I have a good feeling this is going to happen. But there's no reason for you to know that because you haven't been documenting anything. If you document stuff, then there's proof behind your words. There's statistics. There's ways that you could validate your intuition or your feeling, because you could scroll back or you could look back at your trading journal and you could say, wow, okay, every time this has happened, this and this has worked. So that's basically what you have to do with trading. Try to put the math in your favor. All right. So that's that. Basically, we just need to see if the SPY can hold these levels of support. And the thing that I want to look at to see if the SPY can do that is we need to look at the large tech stocks. So for example, we need to look at Apple. So Apple, clearly this is looking very, very heavy resistance and just overall momentum falling to the downside here on Apple. You'd have to be a fool to think that this is really bullish, right? But very simply, what we just did is we're holding on to calls at this level of support. If it breaks below, then we sell it. Very simple. Obviously, it's not, we are clearly fighting against the momentum here. To say that the momentum is in the bulls' favor would be disingenuous, okay? But we're holding at this level of support. And even from the bearish perspective here, Apple looks like the Bollinger Band is falling much lower here, vomiting very similar to the bonds Bollinger Bands as well. So there's a lot more room to fall to the downside before we become overextended. And that's very bearish on Apple. Okay. The other thing that I want to look at is Nvidia. So Nvidia just vomited as well. Now the question is, how much further can Nvidia and these other winners? So Nvidia was the clear-cut winner over the past few months because of all the AI hype. Nvidia got so much love. But today, Friday, Nvidia just vomited to the downside. It's very overextended in terms of the Bollinger Bands now as well. So this can be a, if we end up falling even lower on Monday and it gets even more overextended to the downside, this is not a time to start going short on Nvidia. the move to the downside is already happening. It's already like cascading to the downside. You don't chase these shorts. If it continues falling, the only thing that you could do are lotto puts. This is not an opportunity to go heavily into puts. Okay? Once the move is already happening and things are already overextended to the downside, that's when you take lotto puts. These are not opportunities. These are not smart opportunities to go short. Okay? So clearly, right, we're very overextended. What happens when we're overextended like this? There becomes a better chance of a bounce. So with Nvidia like this and Apple at support, I would be very shocked to see Nvidia drop even if it drops even lower. Then this is like, if it drops to 400 or below 400 on Monday, then Tuesday is going to have, like, I would be shocked if Tuesday doesn't bounce very aggressively. Once enough people are short on Nvidia, and once enough people are done with the AI hype and people like mentally are like, okay, it's time to go short on Nvidia, that is when it becomes the best opportunity to go to squeeze the shorts. For example, you could take Tesla as an example. Tesla, a few months ago, was trading in it was trading down here below $100. Okay, beginning of January, it's trading at below $100. It jumped up to 200, fell back down, it started trading at around 150. What ended up happening again? So in both of these instances, once enough people were short, once enough people thought the market was going to continue falling, what ended up happening specifically over here in April? Tesla, okay, looked very similar to Apple. Tesla and Apple were trading very similarly, okay? So Tesla and Apple were trading similarly. Microsoft, Google, Nvidia, and AMD were the clear-cut winners, if you guys remember during this time, right? And Tesla and Apple were the winners before, but they needed to take a sideline because the AI stocks were getting the hype. So let's just take a look at what happened with Tesla. So Tesla, in terms of the Bollinger Band, after earnings, clearly very overextended to the downside in terms of the Bollinger Bands. Understandable, right? What happened once we reclaimed back inside the Bollinger Bands? So we're no longer overextended to the downside now on Tesla, right? What happened afterward? Big red candle. Huge red candle. Got a lot of people short. And then what happened the day right afterward? Opened even lower. Got even more people short. What did they end up doing? What did they end up doing? That marked the bottom. Once they got enough people to go short, once they made people think, okay, we're already very overextended to the downside in the Bollinger Bands. We're already holding this 159 fib level. Okay, no problem. Yeah, it's going to hold. It's going to hold. The first day that it closed below that, got so many people bearish, and the next day they opened it even lower. That marked the bottom of Tesla. So now, with that same concept, right? Nvidia is also currently trading outside of the Bollinger Bands, right? And my thought process is we are going, once this falls even more dramatically, we are going to catch a bottom on Nvidia. Guaranteed. Because this is absolutely very overextended to the downside. This was a clear-cut winner. It just needs an opportunity to get a bit of a pullback. Once that ends up finishing, then this bounce is going to be magnificent. And yeah, so I'm taking a look at Nvidia. Apple also, you know, Apple is also very overextended to the downside, very similarly to what Tesla was doing back in April. It was trading outside the Bollinger Bands. Everyone thinks that this level of support is going to hold on Apple. We're along it. We're along it. We're not expecting another move down. But if it falls lower, a lot of people are going to be bearish. If this move drops lower, very similar, exactly alike to Tesla, many people are going to become very bearish on Apple. And that is going to be an amazing opportunity, in my opinion, to go long again. And because going short, once we break lower, the only thing that you could do intelligently is to get lotto puts. The puts that you're getting are very, very, like, going short after a over 10% move is risky, which is why if it falls below this level of support, you're considered chasing. This is already a 10% move to the downside. So lotto puts, and yeah, I hope all of this stuff made sense. I hope I did a good job trying to basically explain all of this. But yeah, that's basically my thesis. We have to see how Monday goes. Especially for the SPY, we need to see if 447 can hold as resistance. So if 447 can hold as 447 is a major level on the SPY. So keep your eye on that level heading into Monday. And yeah, we just have to see how Nvidia and Apple respond at these levels. If Nvidia drops another $10, it's gonna be crazy. And then also, obviously, we have to keep an eye on the dollar intraday. All right, so I hope you guys enjoyed. Hope you guys have a fantastic Sunday. Get loads of rest. Yeah, like, comment, subscribe, do all that good stuff, and I'll see you guys bright and early Monday tomorrow morning. All right, take care. Have a good one.